Rich First Republic
Uh,
failing, the second biggest bank failure in American history.
yes.
What are your comments on that?
Well, I've been at a couple conferences since we last spoke, and some people seem to think, okay, the banking crisis is under control. And the last conference I was at, while I was at it, First Republic had all sorts of trouble, and they reported that from March till April, I think it was $100 billion worth of withdrawals from customer deposits took place. As a result, their shares started falling by about 50% in one day, and it didn't get better from there. So yes, the second largest bank failure in U.S. history, the number one being Washington Mutual back in 2008. But what's interesting, for those that think, okay, so is this it? We've got it under control. So Jamie Dimon snatched up First Republic and whatever's worthwhile there and jettisoned the rest, and nothing to fear here now, right? Well, 3 of the 4 top failures in U.S. history just happened in order. The second was First Republic, the third was Silicon Valley, and the third was Signature Bank. I got to think when you have banks of that magnitude failing, that more will follow. I don't know for sure. Maybe things are wrapped up in a nice little package and everything's wonderful from here on out. But I tend to think when there's smoke, there's fire, and most investors do as well. And that's why we're seeing a pullback in banking shares, and in general, a pullback in equities markets as well, because investors are flat out spooked. I think that's the biggest impact of these bank failures. It's when people are uncomfortable and feel unsafe and unsecure that they look for alternatives, and we are seeing that. Whether it be through Bitcoin or gold or silver, there is a flight to safe haven, whether that be real or imagined. That's where people are going right now. And you can see the flight of capital out of the stock market to an extent. But banks aren't the only reason that that's happening. There's also a little concern about the Federal Open Market Committee and what they might do. So,
and what might they do? Their decision is coming up on Wednesday.
Yes, exactly. So they're meeting Tuesday and Wednesday. Wednesday, they'll have their decision, and we get to hear Chairman Jerome Powell flap his lips again about what he thinks is going on or what he thinks he knows. I still believe, as I've maintained over time, that he has very, very limited options. I think they're causing some of the issues in the banking sector. Some of it's caused by just bank boards that don't know what they're doing. Honestly, I think we saw that at Silicon Valley, but they have an impact as they raise interest rates, and then what that does to the assets the bank holds. So they're going to talk again tomorrow. Everybody across the board feels that they're going to do 25 basis point rate increase again in May of 2023. And the vast majority think that's it, no more, finite. I'm not so sure of that. I think we may see yet another. But I do think the pause, and probably for some time, is coming soon, because they've raised it to a point where we're really going to have trouble servicing the debt and all the other things we've talked about in the past. So I do think we are coming to an end. I'm not convinced this is it, but it may very well be. And that's what most people think is going to happen, is 25 basis points on Wednesday and no more for a while. And then we'll see how the markets digest that. Looks like they're already assuming that's going to happen, and that hasn't worked out well in the past.
Now, what would you say to someone who has their money sitting in a bank?
You need a bank. Be wary of your choices, right? So make sure you pick a stable bank. I am not one of those that's of the opinion that we should bail banks out. I think the depositors make decisions to work with banks because they feel they're solvent. Hopefully they've done their homework, and it's not just because it's the closest one down the city block, that they actually look at the bank and they bank with good partners. I think part of that responsibility is on the depositors, and if they choose a bad banking partner and that bank does bad things and that bank fails, I think it's on the depositors. It's not on the rest of us to bail it out for their bad choices. Now that's a hard line, I know, but I didn't have anything to do with First Republic's failure, and I don't see why I got to be on the hook to bail them out. I don't bank with them, but you still need to bank, and you need to be. You need to look at that as an important decision and do your proper due diligence. You can't just refer that away. You have to do that.
A lot of Canadians think that Canadian banks are extremely stable. Are Canadian banks safe from something like this?
I don't know that anything is safe from something like this, but my impression over the years, we used to do a lot more in the way of foreign exchange, and we dealt with a lot more foreign banks and had a lot more one-on-one interaction, probably 5, 10+ years ago. I will tell you that amongst the circles of international private bankers, et cetera, that Canadian banks were highly regarded. That they did business properly, that they kept the proper amount of deposits on hand to offset, potential obligations, that they ran tight ships, as opposed to American banks, which were kind of more like the wild, wild west, is the way they were viewed. So the industry belief is that Canadian banks are stronger, and I don't have anything to refute that. So I'll go with some people that I know and trust over the years that held that opinion.
So what are gold and silver's price action doing in these times with all these things going on?
Yeah, well, we're in the midst of gold, primarily trying to take out resistance at $2,000 an ounce to the upside. It has been over that several times already this year. Got as high as 2,060 and change, which is just below the all-time high of 2,075. I continue to believe that the climate is ripe for gold to take out 2,000, and when it does and holds it, it will run. So therefore, I see every failed attempt at $2,000 to be an opportunity to buy some more, because I don't know that it's going to be this cheap that far into the future. So that's what I see out of gold. Gold is your leader in the complex. Silver should follow its lead and then outpace it once that increase to the upside movement is established, because silver is a smaller capitalized market. So I like silver for the profit play here. I love gold for your wealth insurance. I think both at about 80-1 on the gold silver ratio, number of ounces of silver to buy an ounce of gold. I think both of them are dirt cheap here and are worth buying. No question.
Now, just to wrap up, for the people who see that they're starting to panic, if people are starting to panic, what would you suggest for them to do?
Take a deep breath. Let's face it, this is not going to be the end of the world. We've been through tougher things in the past. We will get through this as well. I think you need to take steps, if you haven't already, to protect your assets. The best way, the best insurance policy that I know of is gold. If you don't have it already, you should be buying it here. I don't know what you're waiting for, but I'm not a chicken little skies falling guy. I think we'll get through this. I am generally optimistic. I admit we have problems right now and we have to address them. And it starts with Congress saying no to spending money on things we can't afford to buy. But given the situation we're in, we will get through it. We're not going to be bartering in the streets for a loaf of bread with an ounce of gold. But having that ounce of gold, I think, will make all the difference in the world to your portfolio and allow you to sleep much more peacefully at night.